For more on the markets as we look ahead to this week's Fed meeting, let's bring in Jason Trennert, Chairman and CEO of Strategas Research Partners. That's a Baird company. They'll cut this week, I guess?
They will. They have to come hell or high water. They want to ease.
Good idea.
They're going to ease. I don't think so.
You don't either.
I think some dude just bought a banana taped to a wall for $6 million. I think there's a lot of.
And then he ate it.
And then he ate it. But it's conceptual.
It's a certificate. That
I get it. But
never mind.
Yeah.
So like my crazy vampires. What were they? I had some apes. What
bored apes? You had a bored ape?
No, I never did. Does anyone have certificates for those?
You can still get a bored ape. They still go for something, actually.
Less than they
used to.
Does the Fed, are they just locked into what they told us they were going to do from this forward guidance, which no one likes anyway?
I think so. And I do think, to be fair, the Fed was probably going to pause when we get into next year. And I hope they would, just because.
So they figure a quarter point's not going to be the end of the world. Let's do it. We said we would.
I think that's it, but I don't think it's a particularly great reason. And there's financial conditions are easy. There's virtually no question about that. And I also think that there are signs that inflation is still with us. So.
What about spreads? Where do the people that say we're absolutely in restrictive territory, where do they get that? What numbers are they? They can give you numbers.
They can give you numbers. They might be looking at the real Fed funds rate. Maybe they take a look at that. But if you look at corporate credit spreads, they're about as tight as you could get.
Does the Fed know that the labor market is softening?
I think the Fed may have a hard time really making that case. There may be some signs of that in terms of the unemployment rate.
Then what is it? What do they know? That because inflation, it seems like if I was going to be worried about, I think that should be their single mandate. I've always thought.
Agreed. And it was until the late 70s.
So even if it's not their single mandate, if the risks aren't equal on labor versus the strength, the stable currency, why not err on the side of the stable currency?
I don't know, because the biggest tax on working people, working class people, and middle class people is inflation, by far. And easy money generally tends to benefit really rich people, right? And that was especially true during QE, because if you had a private equity portfolio or venture capital portfolio, you did great. If you're a regular guy with a savings account or gal with a savings account, you got zero for 12 years. So I'm not a big fan of the Fed's expanded powers, which have been around for a long, 14 years
You seem to be saying
now.
that another quarter point's not going to be the end of the world, and you do not think the Fed is making a policy mistake that comes back to haunt them right now, do you? Or is that possible that we have totally resurgent inflation with some of Trump's policies and
I think regardless of who was president, the chances of a second wave of inflation are quite high. And that's partly because labor in the first wave of inflation always gets left behind. So their standard of living declines. That's why you're seeing very, very generous, I don't know if that's the right word, union concessions, right? You're seeing Boeing machinists get 38% over 4 years. You're seeing longshoremen get 62% over 6 years. That's not consistent with 2% inflation, a 2% inflation goal. If you look at the Atlanta Fed's inflation dashboard, there are 9 numbers on that list. Only 3 of the 9 have a 2 handle on it. The other 6 are in the 3s and 4s. So I would tap the brakes here. I don't know what the big rush to ease is. I know they're very worried about this thing like the SOM rule and the unemployment rate moving higher. By the same token, I'm not a big fan of the idea of being an active participant in the game. You need failure. You need companies to go out of business. You need those things to have proper capital markets.
Yeah. So we need the Jets and the Giants.
Yeah, we need to.
So we need to. Otherwise, there wouldn't be.
You need a little give and take.
Are you going to be at Strategas all year? Do you think next year?
We'll see. We'll see how it goes.
Are you talking? Have you had some talk?
I've been down to Palm Beach, but I wouldn't be anywhere else.
There's been some speculation in the papers about a potential role for this gentleman.
We'll see how it goes. Okay. I'm happy to serve them, but I'm thrilled to stay too.